Today is 7 November 2017. Market gap up and managed to take out the recent high of 2395, closed well with increased volume. Now this breakouts is a continuation of a trend that has been running for quite some time. There is no immediate overhead resistance. The more obvious resistance is at 3460, which is the high made in May 2015. Now spot will be at about 3360. Now the fact that the market has been running for quite some time, so it's actually quite matured, so we just have to be more guarded going forward. Today we also see strong move among the regional markets, in particular Japan, and Hong Kong, likewise Shanghai, Australia. If you take a look at the US market, this is Dow Jones Industrial Index. Notice right now they break the upper channel lines, and the angle of ascent is actually quite steep. So this is pretty strong. Now if you take a look at the S&P 500, notice actually it's trading within the anchor channels, and the recent ascent also quite steep. If you break on the upside, it's likely to go parabolic, and usually parabolic move end in ugly fashion, so we just have to be careful. However, if it were to retrace, it's likely to actually test the lower channel line. Now this is the breakout reports for today. If you notice, we have quite a lot of triggers, and if you notice, there are also a couple of indices that actually got triggered, in particular is financial, and we have UOB breakout today. So notice after about a week of pullback, you managed to break on the upside, and notice the high volume, so it's healthy, likely to actually follow through. Now if you take a look at DBS, similarly, stocks actually very strong. In fact, the breakup happened much earlier, followed by 2-day pullback, and on this day itself, you notice the pullback volume is extremely low, so that's very healthy. And today managed to break on the upside with a wide range bar. OCBC is among the three laggards. You notice it's still trading below the band. So DBS and UOBs are the better bets. Now again, if you take a look at the reports, there are quite a number of those ultra penny stocks. Again, it's important to always trade the higher volume stocks. Okay, the liquidity is important. So for example, stocks like Naratel, alright, even though it's about 39 cents, we just have to be careful that stocks with a pattern like this, generally we should avoid them. Notice a lot of the dot and dash, so it does show that actually the stocks is not persistent. So these are the stocks we will avoid even though we have a trigger. Now, however, things can change. If it becomes persistent, we can actually take the trades. Now let's review some of the recent strong stocks. This is Venture. We have a breakout on the 31st October, followed by 3-day shadow pullback, and it actually gap. And today trade a reversal bar, which is expected because this is an extension bar, and an extension bar we should lock in some profit and keep the value positions and manage them closely. This is UMS, very strong runs, and if you notice over here, it trade with big daylights and of course prone to corrections. So over here itself, we should actually take our profits, and stock maybe become range bound. Again, we like to wait for a re-entry when you trade above the high here of 1075. High P. Over here we have a re-entry. Stock actually gap up yesterday, but today pull back. Notice the pullback, a company with very high volume. The only consolation is managed to actually support at the gap here. So important to see what happened over the next few days. Now, of course, if we continue to move down, it's better to actually get out the positions and wait for the next move. Verutronic. Again, manufacturing's leading. Here we have a very large bar here, expected to pull back, and this is what happened. And today trade inside day. So you have this trade, we just have to manage currently tagging the band. Sunning down tag. Again here we have a re-entry. Today again pullback with low volume that's healthy, tagging the upper band. Now we also see some strong move from oil related stocks, and in particular Capricorn is quite strong. If you take a look, the breakout actually trade for about 30 days before you actually go into the box. Even though today there's some move, but it's too early to actually trade. We like to actually wait for the stock to actually trade outside the box. Semcom Marine. Over here we have a break, and this is extension bar expected to pull back, and obviously it's important to lock in some profits. So far the pullbacks is quite healthy. The volume actually does taper off. So again, wait for it to actually eventually break above this high here of 204. Semco Industry. Though we have a very nice move here, if you notice over here we have actually daylights, and it managed to close the daylight and actually got stuck within the band. Here there's a attempt breakout and followed by a long dated doji, so it'll be uncertain, and you actually have a gap down. Now the fact that actually a gap down is better to actually get out of these positions because it's now trading below the band. So again, you may meet sometimes before you actually break on the upside. Let's take a look at some of the property stocks that has actually been running. In fact, most of them has already finished its move. This is Chim Sing. Again, you notice stock trade very nicely and then trade below the bands, and here is where we get out. So again, stocks usually after a strong trend, it's likely to become range bound, trading sideways. It'll take some time before you break on the upside. Likewise, Lianbing. So very nice move. Again, is trading below the band. So here is where we actually get up. CityDev. Notice actually over here we have a very nice break, and the stock actually floating above the bands. Extremely strong. This is a clear sign of weakness. It's a topping tail. So again here we should actually take some profits and get out of this bar here. This is a wide range reversal bar. So again, it's very important to be able to stay on winning trades. UOL. Again, notice actually over here itself, it managed to trade below the band. If you have to actually try to actually get out on a violations of the band, if you notice actually it did not trigger. It trade a series of up bar, and perhaps this is a place for you to actually get out. Now of course it's pretty okay if you actually get out here, because generally trading below the band is not something which you like to actually do. However, if you hang on positions while the stocks are trading below the band, it is important to have a series of like something like that, up bar, that show that actually they're still buying. Alright, first sign of weakness is to sell. So very few property stocks are running right now, except for the second tier, for example, Hong Fok. But unfortunately, such stocks usually has lower volume. So again, if you happen to trade Hong Fok, you got to be careful right now. It's actually tagging the lower band. So after this wide range bar, so again we have to just manage it closely. Hobby. So notice actually it is now tagging the lower band. Sing Holding. Notice actually the stock actually after a run-ups trade below the band is where you get out, and right now it's still stuck within the congestion box. Now if you actually take a look, this is actually a saucer pattern on top of another saucer pattern. Alright, so it's a very big consolidation pattern, and perhaps you'd like to see the stock eventually break above the congestion box high of 515. Some of the ultra penny stocks has done well. In particular is Chiltern Chemicals. Alright, the trigger quite some time back, and very nice move. And then over here we have an extension bar. Should lock in some profit today. Trade a doji, likely to pull back. China Sunsing. This stock has been trending very nicely. So again, if you happen to have these trades, manage them closely. Alright, and any sign of weakness, you can take partial profits and then trade the balance positions. We have some actions from Genting. Here we have a wide range bar, or maybe we can classify that as extra wide range bar. Then notice actually after that is a pullback, and today managed to actually gap up. So again, we do not like to see the stock close the gap. So this is something we can actually look out for. So this is some kind of supports. So usually after big gaps, it likely to actually pull back, but it's important we don't want the gap to be closed. So going forwards, it is important to be more selective right now because many of the strong stocks that has already run ahead. For example, properties is already consolidating. There are some new one coming up, in particular the banks. All right, and some of the manufacturing stocks. The fact that market is strong, we should avoid shorting. However, if the sentiment turn for the worse, we can actually consider that.